James Altucher just found a backdoor way to invest in Elon Musk's next Super-IPO. Or at least that's what he said in his stock teaser a while back. But as usual, he won't tell you the name of this backdoor play unless you pull out your wallet and buy his newsletter, but don't worry, I have good news. He left a lot of clues in his presentation, so in this video I'll tell you the name of this stock for free. Before diving into the big reveal, let's take a quick look back at some of James's previous stock picks to see how they've fared. In May 2021, he spotlighted microchip technology, riding on the idea that it would profit from Jeff Bezos's ambitious satellite plans. But unfortunately, that stock hasn't really taken off and has mostly stagnated over the past few years. Then, in November 2023, James unveiled two stocks he called his AI crown jewels. The first, Taiwan Semiconductor, turned out to be a huge win, doubling in value and climbing about 100% over the last year. The second pick, ASML, has had a wild ride. Its performance has been shaky, and it's up only around 2%, lagging behind the broader market. By March 2024, James shifted gears and recommended Penguin Solutions, betting on Nvidia's new Blackwell chip, but this one has taken a dive since. However, not all was lost. His call on Credo technology tied to AI and the iPhone has been on fire, making solid gains in just a few months. Now back to James's latest teaser that has everyone buzzing. He claims that Elon Musk is gearing up for a massive Super-IPO on December 31st, and suggests there's a clever backdoor way to cash in for just $50. James predicts this IPO will be so enormous that it could eventually be worth trillions and even generate over $100 billion in wealth the moment it hits the market. So, which Musk venture is he referring to? It's none other than Starlink. For those who aren't familiar, Starlink is SpaceX's groundbreaking satellite internet project. Picture a constellation of thousands of small satellites orbiting Earth at low altitudes, creating a network that beams high-speed, low-latency internet to dishes stationed on the ground. The goal? To connect even the most remote and underserved areas of the world, bridging the digital divide with blazing internet speeds. Starlink is already proving to be a game-changer for individuals, businesses, and even governments. But here's the twist. James isn't suggesting you wait for Starlink to go public. Instead, he's hinting at investing in one of Starlink's key suppliers to get in on the action early. I'm going to reveal the stock James wants you to buy in about 20 seconds. But before I do that, I want to remind you to click the link in the description to check out the insider newsletter. The backdoor stock that James was referring to is called STMicroelectronics. Imagine a company born from the coming together of two giants in the electronics world. That's the story of STMicroelectronics, a semiconductor powerhouse that emerged in 1987 when Italy's STMicroelectronica and France's Thomson Semiconductors merged forces. Today, STMicroelectronics, or STM for short, has its headquarters in Geneva, Switzerland, and it plays a key role in supplying electronic components like integrated circuits, microcontrollers, and sensors to industries ranging from automotive and industrial to personal electronics and communication equipment. Now, there's been some buzz about whether STM has any involvement with SpaceX's Starlink project, the ambitious satellite internet network that aims to bring high-speed internet to even the remotest corners of the world. But here's the thing. Despite rumors and speculation, there's no solid information confirming that STMicroelectronics is directly collaborating with Starlink. Sure, the components STM makes could theoretically be useful in satellite communications, but, as of now, there's no concrete evidence tying them to Elon Musk's satellite endeavor. When it comes to investing in STMicroelectronics, I'm not too enthusiastic and would rate it a 2 out of 5. Why? Well, the company's growth story has hit some rough patches. This year alone, STM's revenue projections have been slashed multiple times. In October, they forecasted full-year revenue of $13.27 billion, a sign of shrinking demand that has dragged down their sales outlook. This kind of slowdown is a big red flag for a company's financial health. It gets worse. The stock has been on a downward spiral, plummeting by 45% year-to-date. When you see a drop like that, it often points to deeper issues, even if they aren't immediately obvious. And it's not just me who's concerned, analysts are too. Firms like Morgan Stanley have downgraded STM, which usually signals a lack of confidence in the company's short-term prospects. Despite STM's long history in the semiconductor game, the warning signs are clear. Declining revenues, shaky stock performance, and skeptical analysts all paint a challenging picture for the future. If you're considering investing, it's crucial to be aware of these risks. Now let's compare STMicroelectronics to a company like BW Offshore. I'd be willing to bet that you've never even heard of this company before, let alone invested in it. But that's a good thing, because as they say in investing, if everyone's talking about the opportunity, it's too late. Instead of investing in a tech company like STMicroelectronics, sophisticated long-term investors prefer more stable companies that solve fundamental problems. BW Offshore could be a great long-term investment, especially with its unique position in the offshore oil and gas industry. The company owns a fleet of FPSO ships, floating facilities that process oil and gas directly at sea, with a price-to-earnings ratio of just 3.8 times and an impressive dividend yield of 9%. It's currently undervalued, even though it's still down about 80% from its peak in 2011. What makes BW Offshore especially interesting is that many investors overlook the essential role these FPSOs play in offshore oil and gas production. You can drill all the wells you want, but unless there's a way to process the oil and gas, those wells won't produce any value. While some offshore projects can rely on undersea pipelines, many of the new, high-potential offshore developments in places like Guyana, Brazil, and Namibia are in deep water. For these, FPSOs are essential. Given this growing demand for FPSOs in key offshore regions, BW Offshore is positioned to benefit from these long-term trends. With strong fundamentals, a low valuation, and a solid dividend yield, it could be a smart choice for long-term investors looking for exposure to the oil and gas industry. If you're curious how I found this company, it's thanks to the investing newsletter I mentioned earlier. They not only shared the company's name, but also gave some solid analysis to help me decide if it's a good investment. As a thank you for watching until the end, I'll send you an issue of their newsletter for free. It comes with 5 high-quality stock recommendations. Just click that link in the description and I'll send it right away.